Best Buy shares getting a boost pre-market after the retailer posted a beat on profits, revenue, and same-store sales. The company also raised its full-year sales and margin forecast. We see Best Buy popping almost 10% in the pre-market. Now, someone on Twitter called me out on this morning, saying my call on Best Buy yesterday, which I did on my take, was wrong. First of all, we're not making any calls on Best Buy. Secondarily, this was not a good quarter from Best Buy. You saw same-store sales down in every single category. You saw operating margins down in the domestic and international segment. None of this is fundamentally good. Now, what did you see? Why is the stock up? This is a company that came out in late July and cut its full-year outlook. This is a company that came out and beat its own lowered expectations. This fundamentally was not a good quarter from Best Buy.
There's a kind of contrarian view that I take about this. I think this was a sack fly quarter. You look at the number of inventories that were actually down at Best Buy, which is a good thing. Best Buy also in the management team has to look through what the actual consumer demand is going to look like over the extent of a year where they already know so much of that has been pulled forward in some of the home technology categories for consumers. And we've seen weakness within this discretionary category across Target, Walmart. This has been cited time after time within this retail earnings season. And so for Best Buy, what if this was a sack fly quarter? What if management did say, you know what, we don't need to replenish some of the same categories, whether that be TV, whether that be refrigerators, because people have already made some of those purchases. So that's kind of the approach that I'll give them. I'm giving them a little bit of credit
sack
here.
Fly.
If it was indeed the strategic move. But
I'll call it a bunt.
A bunt.
A foul bunt.
Yes.
Well, whatever way you slice it, the expectations were that they were going to get a pop fly out right away,
Oh,
right?
Is that you with the sports reference?
I don't know if I did it right.
You did
but
do it
in
right.
Any
Wow.
case, in
Wow.
any case, well, the expectations were very low, right, coming into this, both because of what we saw from the government figures on electronic sales and what we've seen from other retailers, right? Yeah. Target saying that electronics was one of the weaker parts in the store. So when the expectations are that low going into earnings and the earnings come out okay-ish, that's when you see potentially a better outcome in the stock price reaction. The company also said, there are other things on the margins that might be helping here. The company is resuming stock buybacks this month after they paused in the second quarter. So that's a signal not only that they're returning cash to shareholders, but that they feel good enough to do so, right? So those little things also help.
Right. The only thing I did like on this quarter, and this is the first retail that I've seen this so far, inventories down 14% year over year. Some of that might be related to the timing of when they received that inventory ahead of the holidays, but it looks like they blew through a lot of stuff that wasn't selling in the third quarter. Of course, came at the expense of margins, but still, I'm looking at the category performance here over at Best Buy. Computing and mobile phones, same-store sales down 11.4%. Consumer electronics down 12.8%. Appliances down 9.6%. Not surprised there, given what we heard from Whirlpool when they reported earnings last month. But still, overall, to me, this is a consumer that looks very cautious or feels very cautious into the holidays.
It is cautious. They also now expect comparable sales to decline approximately 10%. That one of the updates that they gave in their outlook as well.